2, 3, testing, testing, 1, 2, 3. Can you hear me? Can you hear me? Can you hear me? Type in a yes, Y yes into the question section box if you can hear me. Fantastic. Hey, Scott, Archie, Dearwood, Janet, FJ, John. Thank you so much for the confirmation. I really appreciate it. Thank you so much for joining us today. The current time is 11:03 a.m. Eastern Time. Today's date is Thursday, April the 27th, 2017, making this a live presentation. Now, I'm very excited to work with each and every one of you. We have a great experience planned out for you as an investor. Now, it is only a few days left within the Forex market in regards to the month of April. So what does that basically mean? I need everyone to be on the lookout for reversals that are going to take place with the Great British Pounds and the Euros. Type in yes, why yes, if you understand that the Euros and the Great British Pounds are reaching high points, and you really need to expect that if you're buying this market to begin to take profits and to anticipate the bear drop. Okay, tomorrow is known as correction day. Friday is known as correction day. So what the heck does that mean? Okay, well, whenever you see the market push in basically a straight line all week long, like we've been seeing this entire week, usually on Friday, everyone who bought throughout the week takes profit. Why? Well, most people do not like holding trades over the weekend, right? So if you can avoid holding trades over the weekend and realize profits for the week, you do it. Furthermore, okay, it's the end of the month. So money managers, professional investors, hedge funds, what they're looking to do is they're looking to realize gains so that they can report to their followers and say, hey, I've made this much money for the month. And so they're going to strategically begin to close out their trades. I've been yes, and this begins to make sense. So I need everyone to be on the lookout that from now until the end of the day tomorrow to see larger bear retracements on your Euros and your Great British Pounds. Do not let these shock you, okay? It is expected. So we're going to be looking for those today. Now, in front of you is a risk disclaimer. Just means that there's risk involved in trading the Forex market. You should never invest money that you cannot afford to lose. Always keep equity management in mind. Understand that we are not CTAs, which stands for Commodity Trading Advisors. And what that basically means is this. You know, I'm going to share with you exactly what to do. I'm going to teach you a nice little formula of success, but ultimately it'll be your decision and your job as a trader to make, you know, to say, yes, I'm buying, or no, I'm not, or yes, I'm selling, or no, I'm not. You have all the control. You can decide to place a trade, or you can decide to pass on the trade. Now, for those of you who are brand new, my name is Joshua Martinez, and I am Market Traders Institute's Director of Client Success. Now, I've personally taken a $500 US initial deposit investment, and I've been able to generate over $39,000 US of profit from it. I am a published author, international speaker, professional analyst. I've trained tens of thousands of individuals from all around the world. I'm a full-time trader. I'm known throughout the Forex community as FX Pathfinder. The last 15 months, I have not had a net losing month in over 15 months. I have not had a net losing day since February 13th, 2017. I've made over 42,000 pips and counting in the last 15 months, and I'm winning over 76% of all my trades. I'm considered to be one of the premier investors and mentors within inside of the Forex industry. You may have already seen me, heard of me, or read about me in the following areas: Your Trading Edge, FX Trader Magazine, Equities.com, Forex Crunch, Executive Trader, TraderPlanet.com. I run the mastermind group here at Market Traders Institute, as well as I'm the creator of the FX Leveling Program. Today, I have a radio interview with the show, The Voice of the People, and that's going to be this evening at 5 p.m. Eastern Time. I'm not sure if it is a live radio or if it is a recording in which they're going to edit and then post. So I'm not sure how that's going to work. But that's going to be, it's called The Voice of the People. It's going to be today at 5 p.m. Eastern Time, which is actually pretty neat. So with that being said, Donald goes, and you are the 007 of FX trading. Very funny. All right, so with that being said, let's go ahead and get started. I'm going to share with you a trade in which I'm actively in. I'm actively investing into what's called the euro against the Australian dollar. I think it's a fantastic trading opportunity. It's producing an abundance amount of opportunity. Matter of fact, what I would like to do is I'll share it with you, but I think results speaks tremendous volume. And what I would like to do is share with you my track record and say, okay, well, this is myfxbook.com. This is where I have my track record and my closed positions displayed. And what I've been focusing in on for most of the part for this week is the EuroCAD. So do me a favor, type in yes, why yes. If you can see that since the 25th, I've traded 1, 2, 3, 4, 5, 6, 7 Canadian dollar positions, or EuroCAD short trades, okay? Now, what has this produced and of the 7? Well, let's go through it. Minus 28.5 plus 44.8 plus 90.3 plus 41.4 minus 22.2 plus 17.6 plus 70.6. So basically, since the 25th, and what's today's date? Today's date is the 27th. So in the last 48 hours, we've been able to strategically extract 271 pips. Now, today's Thursday, tomorrow's Friday. Let me ask you a question. Type in me, M-E, if you'd be happy if you made an extra 200 to 300 pips selling the EuroCAD over the next 24 to 48 hours. So let's do that, okay? So that's what we're looking to accomplish, okay? And I'm going to share with you why I believe that the EuroCAD can produce that. And you're going to have to be strategic about it, and you're going to have to be intentional about it, okay? So let me make sure I change my feed. I'm going to be on secondary. By the way, I love the secondary feed. If you want to change it, I'll share with you how to do that. But basically, all you're going to do is you're going to left-click over this little blue button, and you're going to go to Change Forex Feed, and you're going to change it from primary to secondary, okay? The feed just comes from different sources. What I found is the secondary feed does provide a little bit more data for the history, which I like a lot. But be that as it may, we look at the euro against the Canadian dollar monthly time frame. Why in the world do I think this market's going to have a bearish reaction? Well, a couple things. Number one, markets do the same things inside of the same areas over and over and over again. So you have the euro against the Canadian dollar, and you're inside of an angle to where this market enjoys to U-turn. Furthermore, you have an area within the EuroCAD monthly time frame where the market enjoys to form U-turns on the bottom. So you have an area of resistance, 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 resistance. You have an area of support, 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 and support. All I need you to do is just say, yes, I would like to sell this market, or excuse me, just say yes if you agree that if you would have sold the market at the top blue level, you could have made profit on the way down. Type in yes if you agree that if you would have bought the market at the bottom blue level, you could have made profit on the way up. Now, why do I have you do this? Why do I have you confirm? The reason why I have you confirm this is because the fact of the matter is that's the pattern that's producing the most amount of income. Touches the bottom blue level, you buy it towards the top blue level. Touches the top blue level, you sell it towards the bottom blue level. Some of you who are brand new and some of you who are not, some of you who are not as experienced, you may look at this and say, Josh, well, this is hindsight. This is really easy to see. Well, yeah, and it's actually really easy to see right now too. You just now have to put your money where your mouth is, and now you have to say, do you believe that this market's going to fall bearish because we hit the top blue level, and do you believe it's going to fall down to the bottom blue level? That's the question that you're going to have to answer for yourself. My answer is yes. I believe that. Why? Well, because since 1993, that's what this market's been doing. Now you may turn around and say, but Josh, what about this in the news? And Josh, what about that in the news? And what about this and that? I think we can all agree there's been a whole lot of this and that in the news in the last 20 years. I think we can all agree there's been world economy crashes. There's been a tremendous amount of wars. There's been this missile gone off, that missile's gone off. There's been this crisis and that crisis. There's been this election and that election in the last 20 years. And type in a yes if you can clearly see that this market has still maintained its structure of the channel. And now what you have to do is you have to say, is that enough evidence to make a decision to where if you were to look at this 100 times, selling would make you the most money. Because at the end of the day, that's what it really comes down to. It would be nice to win 100% of our trades, but that's very difficult. So instead, what we do is we say, are we trading in the direction of the highest winning percent odds? I think if we sell this market, the answer is yes. I think if you buy this market, it's more of a wishful thinking, and you're just hoping that the market does something that it has not been able to do in over 20 years. See, if you buy this market and you say, hey, I'm going to buy the market because I believe the market's going to rally up towards the blue line again, it has not done that in over 20 years. Once it touches the blue line, it just falls. It creates waves and it just falls. So you have to make sure that you're trading with all the odds in your favor. And this is a clear picture that the bears are going to be taking control, okay? Let me go ahead and break this down, okay? Now, when I view this and when I look at this, I say to myself, okay, I don't want to be just a willy-nilly trader. I would like to strategically apply the most appropriate habits which make the most amount of money. And some of those habits are to being intentional about selling the market when it's at a high price. So when the market's at a high price, I would like to enter into the market selling. But I would also like to have the convergence and the trust and the confidence that I'm entering into an area where the market has history of U-turning. Bringing in a simple trend line from the highest point of where the trend started can begin to really open the door and help you find these areas. Does everybody see that on the euro against the Canadian dollar, that the market as of right now is hitting a downtrend line, and that this downtrend line does a fantastic job pushing or having the market fall? So not only are we in a 20-year channel, but we are at a high price, and the market's hitting a downtrend line, which is an angle to where the market likes to fall on. So for me, I look at this and I say, let's sell the heck out of this currency pair. Now, if we are going to sell the heck out of this currency pair, where do we stop selling the heck out of the currency pair? So what I mean by that is this. If this market is doing a fantastic job making lower lows and lower highs, how do we determine the next low price? Type into the question section box what tool that we can bring in to help us find this low. Okay. Excuse me. Fibs, right. Ann nails it. Alan says fibs. Ruben says fibs. Peter says fibs. Michael, we can look left, absolutely. But, you know, bringing in the fibs with the wave movements is always an ideal scenario. So we bring in Fibonacci's, and we say to ourselves, well, here's down A, there's your B, there's your C, 618, D, extension 1.618. So we have an understanding that, hey, no, the market is expected to fall bearish. Look for the market to hit 1.2991. So 1.2991 is going to be the Euro CAD monthly down D. That will be the limit. And how far away is that? 4824 minus 2991, about 1,833 pips. So the reality of this is, and this is the truth, okay? The truth of how this works is the following. if you just sell this market now and you were just to like close your computer and walk away, you come back in 3 months, you're going to be in the profit. According to the percentages, if you just sell right now, walk away, 3 to 6 months, you're going to be making 1,800 pips. Type in yes if you really understand that. And that's what a position trader does. A position trader says, hey, I don't care about the day-to-day stuff. I'm just going to sell it, walk away, enjoy my life, come back, and I'll be in my profits. But really, position traders, and the reason why position traders are position traders, normally because they have a whole lot of money, to where 1,800 pips is going to be worth almost like 300 plus thousand US dollars. So, you know, it's worth their time just to wait it out. But if you're trading like $1 a pip, you know, to make $1,800 in 6 months is not really what you're searching for. You want more than that. And so typically what ends up happening is, as an investor, you look at yourself and you say to yourself, okay, well, how can I optimize this? How can I turn this 1,800 pips into like 4,000 pips? How can I really expedite my returns? Well, if you want to expedite your returns and make more than what's available on the screen, you're going to have to be intentional about it, which I like to do, and that's why I bring in different time frames. So I look at the monthly time frame and I say to myself, okay, long term I need to be selling. If I just sell this market, walk away 3 to 6 months, I'm going to be in the profit. So if I can use time to my advantage. And if I short the market and the market goes against me, I can just wait it out. Type in yes if you understand that. If you just sell this market that goes against you, you can just wait it out. And according to percentages, the market will eventually turn in your favor. So we can strategically use time to heal our wounds of negative positions, which I like to use a lot, okay? So sometimes you're going to see me hold on to trades for like a week to 2 weeks, sometimes 3 weeks, and I let time fix it, fix the bad trade. Now, I'm going to go to my daily time frame. And off my daily time frame, my number one goal is to look to sell this market strategically at high prices. And I know that there's 1,800 pips of bearish movement off the smaller time frames. And what I would like to do is I would like to sell high and profit low, sell high and profit low as many times as I possibly can over this journey. And that's going to help me expedite my returns, okay? So what I want to do is bring in the end goal in mind, which is 1.2991. And when we look at 1.2991, we're going to mark this 1.2991. We're going to go Euro CAD monthly down D. That's a limit of 1,833 pips. I got to change this. This says due. Monthly down due. Now, here is your down trend line. Okay, we're hitting it right now off of the daily time frame. One of the things in which I really like to do is listen, trading, holding a trade, education specialist, please be so kind to respond to Frank. Now look, whenever you think it's time to sell the market, do yourself a favor. Bring in a horizontal line, okay? Trader's tip, write that down. Whenever you think it's time to sell the market, wherever you think it's time to sell, just put on a horizontal line and follow that line and ask yourself this question. Does the market form highs and lows at, on, or around that price point? Yes or no? If the answer is yes, you have yourself a pretty good trade. If the answer is no, you probably should not enter into the market. Now, answer the question, please. Does the market have history of U-turning on that horizontal line where we believe the market's going to fall because it's hitting a downtrend line? Yes or no? Does that build confidence? Does that make you say to yourself, hey, this looks pretty darn good. I now have a good feeling about entering the market selling. If the answer is yes, let's look to actively trade and sell the market. If you don't have that good feeling of saying, well, if you're saying to yourself, well, I'm not sure, don't trade. Don't enter into the market. When in doubt, stay out. But the reason why I say that is because if you don't believe that the trade's going to work, you're not going to follow through with the plan. And you're going to self-sabotage yourself. So you have to look at this and say to yourself, hey, this is going to work. So what I'm going to do is I'm going to zoom in here and I'm going to ask the most important question, which is, if the market is to fall bearish, how is it going to fall? And so I have a monthly down D where we know in the next 3 to 6 months the market is, percentage speaking, supposed to fall bearish over 1,800 pips. So do you think that we're going to fall 1,800 pips in a straight line, or do you think it's going to fall in waves? Think about that for a moment. What I mean by that is, do you think that the market will do this? Probably not. The market will more than likely do something like this. Why? Because the market does not move in straight lines. The market moves in waves. Why? Buy low, sell high. If you enter in selling high and the market's at a low price, you want to take profits, so you exit. Well, if you're selling and you exit, you have to buy, and that causes the market to go up, and vice versa. If you buy low and the market's at a high price, what do? You sell your position, and that drags the market back down. So traders who are taking profit at low prices and high prices, or entering at low prices and high prices around the whole world, they are assisting with the wave movements. And so the reality of this is you have a decision. You can do one trade and just take the whole ride down for 1,800 pips, or you can strategically find the high prices and profit out of the low prices. That's okay, CAR. Very glad to see you in here. And sell high and profit low, sell high, profit low. So what would you like to do? Would you like to do one trade, or would you like to swing trade? Because if you're going to swing trade, you're going to take advantage of the swing, the push. So type in swing, just make a decision. There's no wrong answer. Make a decision. Say, I'm going to swing trade, where I'm going to strategically sell high, profit low, sell high, profit low, or you're going to position trade. And if you're going to position trade, say one trade. Because if you're going to do one trade, sell the market now, take your ride. 3 to 6 months from now, you make your money. But if you're going to swing trade, we're going to focus in on the first push, which is about to start. And all that really means is you and I need to discover where this low price is going to be. Now, just think for a moment. How do we find this low? How do we find that low? Education specialist, please be so kind to respond to Suli. Jeffrey says, look left. Linux says, look left. Peter says, look left. FJ says, look for common support. So basically what you're telling me is you're saying, well, Josh, don't try to discover a new area by guessing. What you're telling me is you're saying, go find an area where the market has already formed a high or low and just use that. Is that what you're saying? So is it fair to say that this is what you're talking about, resistance becoming support? There's a high price, and if the market formed a high price there, it probably will form a low price there, which really means our limit is going to be 1.4597. 1.4597 is going to be the daily future support. Now, you may say to yourself, well, that's just one. Does the market use that over and over and over again? I don't know. Let's see. So let's just ask the question. If I were to bring in a line, just a horizontal line, and just say, hey, I think the market's going to form a low here. You tell me, does the market have history of forming U-turns on, at, or near 1.4600 which is an area where you and I would like to take profits based upon what you said? Yes or no? Does this build confidence in you that you have an opportunity to maximize your return by selling now, limiting out at $45.97, and then waiting for the next high price? Basically, what I'm saying here is this. According to what we are seeing, it is expected that this market is to do the following. Lower lows, lower highs, lower lows, lower highs, lower lows. To where you and I can sell the market now, let it profit out, sell it again, profit out, sell it again. Make sense? Okay, beautiful. All right. So how much is this and how far away is this? Let's see. 4843 minus 4597, 246 pips. So 246 pips away. So you can enter in selling off the daily. I don't like to do that. I like to enter in selling off of the 1 hour time frame. I do enjoy entering and selling off the 1 hour time frame. So the reason why is we can find waves because, you know, this is a daily time frame. It's going to look like just bear candlestick. That's what it's going to look like. But I'm going to be looking for lower lows and lower highs on the way down. So let's see. If I go EuroCAD, EUR, CAD, 1 hour time frame. And I say, okay, well, let me just transfer over my limit of 1.4597, 5, 1.4597 is going to be the daily future support. That will be my limit. That's 246 pips away. Okay. How would you like to sell this market? I guess what I'm asking you is, what do you want to see to say, okay, I'm selling? What is your requirement? All right, On says, I wanted to break a trend line, so let's bring in a trend line. Okay. You tell me. Did it break your trend line? Okay. Now, what is that good enough? Do you want to sell it now? Is this good enough for you? Or do you want to look for something different? Some say it's good enough and they sell now. Okay, so sell. But if you want to wait for something different, what do you want? Well, SAB says, well, I want a counter trend line break, okay? So let's look. Did the market break and close below a counter trend line bearish at the backside of the trend line? Yes or no? Education specialist, please be so kind to respond to LUL, please, regarding the reinstall of the Ultimate Charting software. Okay, so in theory, you should have already received your short trade. Now, you may say, but Josh, we're testing it again. Okay, it's fair enough. So maybe you wait for this. For me, I look at this and I say to myself, well, I already received my counter trend line break bearish. Just it looks like the market's just forming resistance. Now, answer my question, please. Please answer this. If you think it is time to sell the market, what do you do? What do you do first? So you think it's time to sell. What do you do? Think. Think. You need confidence. You want to feel successful. You want to have the feeling of, I'm going to win this trade. What do you do? Bring in a horizontal line. And look left. Sometimes you got to bring in more bars, especially off of a 1 hour. Let's add in more bars of memory. Ooh, 10,000. It's a lot. Okay, here's this black line. And you can go back as far as you want. There's no like restrictions on it. This market's like an elephant, it never forgets. You tell me, does this black line cause U-turns within the market? Yes or no? What I'm asking you is, if you sold the market when it came near these black lines before, even over here, could you have made a profit on the way down? You may say, well, there's a spike. Don't look at that spike. That's the election. I'm talking about, for the most part, percentage speaking, if you would have sold here, 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 and here, and here, would you have made a profit? Yes or no? Okay. Now, let's break this back down to 500 bars of memory so I don't kill my computer. Are we touching that black line now? Yes. Does that make you feel good about thinking about selling? It should, because what you're doing is you're stacking the odds in your favor, and you're saying to yourself, hey, I'm not doing anything different that the market hasn't already done. See, your goal as a trader is to do exactly what the market has already done. It's when you try to do something different that the market doesn't do, that's really where you find losses. But if you sell when the market falls and you buy when the market goes up, and there's lots of history, percentage speaking, you're going to make a lot of money. Now, what if you lose? Have good equity management so that a loss doesn't destroy your account. That's what that's about. So, in my opinion, I think you're good to sell. So I'm just going to say market sell 1.4837. What you can turn around and do is you can turn around and say, star, if I wanted to wait, I would wait for a counter trend line break bearish. But I already got one. I already have it here. So it's really your decision. I think it's good to sell now. Now, where do you place your stop? 20 pips above this previous high. I like a larger stop. I like to trade with 500 plus pip stops. I find great comfort in that, but I know not everybody likes that. So you can just do 20 pips above this last major high. So stop can be 1.4926. And how far away is that risk? Well, bring out the calculator. 4926 minus 4837, 89 pips. So risk is 89 pips, and reward is 246 pips. Okay. And there's your trade. Type in done, D-O-N-E, when you have this copied down. Yeah, Jim, that's what I like to do. That's what I like to do. Just relaxes my brain. It lets me focus in on just trading, which I think is important. But not everybody likes that. But I've been doing it for a while, so it doesn't bother me too much. Okay, and if the market falls, you have 246 pips to be had. So equity management works great. Now, if the market is to rally bullish, stops you out, and gives another selling opportunity, you have to have the confidence and the courage and the belief to sell again. If you don't see the camera, James, press escape. Your your screen might be too enlarged. So press escape, make your screen a little bit smaller, and you should see the camera on the upper right-hand side. Yes, yes, Jeff, absolutely. So you can just lower the lot. Just if you can eliminate. So one of the things which I like to do is, especially when I teach traders, you see, and we're going to look at another currency pair, but I think this is worth mentioning. I think it's important that you give yourself the ability to trade and really allow your body and your mind to focus in on the actions of being a trader versus the actions of saving money. So what does that mean? Well, let me just ask this question. Be honest. This is going to help you out. It's a little exercise. It's going to take 1 minute. If you lose $100 today, would you be upset, yes or no? Just type in yes if you would be upset if you lost $100 today. Type in no if you would not. What I'm asking you, would you lose sleep over it? Would you feel like throwing up? Would it affect you? If the answer is yes, it would bother you to lose $100, don't risk $100. Don't risk $100. Don't do it. Okay? But if it doesn't bother you, then you know that your emotional threshold of $100 a day worth of loss is not going to affect your everyday living. Okay, if you lose $1,000 today, if you lost $1,000 today, would that emotionally affect you, yes or no? Just answer it, yes or no. If the answer is yes, then don't risk $1,000 because it will put you into the bad mindset. But if the answer is no, it's no big deal, I can lose $1,000, it won't affect my everyday lifestyle, then you have your emotional threshold. Too many times, traders will risk amount of money, and then when they trade, they say, I really can't lose this money. If I lose this money, it's going to affect me too much. Therefore, you will never have the ability just to be a trader. So if you are in that habit of saying, gosh, I can't risk this much money, don't do it. Lower it to the point where you were to say, hey, if I lost $10 today, it's not that big of a deal. If I lose $10, it's not that big of a deal. And what does that do? It makes you fearless, not reckless, but makes you fearless. And it gives you the confidence to do what traders need to do, which is make effective decisions without fear of losing. See, if you were to swim in your swimming pool or go swim in a lake or in the ocean, and all you thought about was drowning the entire time, you would never have the ability to enjoy the fun that a swimming pool or swimming in an ocean brings. Type in yes if that makes sense. You would never experience the joy that you can really get out of it. If you are so fearful of losing the money at trading, you will never be able to function as a trader. So don't self-sabotage yourself with that. Make sense? Okay. Give me a currency pair that you're actively trading. Let's look at it. I'm actively selling the Euro CAD. I like this currency pair a lot. Give me a currency pair that you're actively trading. Majority rules. Ooh, a lot of pounds. Good. A lot of Great British pounds. Now, which pound? Pound NZD. Okay, a lot of traders are trading pound NZD. Let's go ahead and see why. So, Great British Pound NZD, GBP NZD, monthly time frame. Wow, look at that big old bullish movement. It's amazing, huh? Okay. Let's ask the question. Pound NZD is pushing bullish. What could stop this market? What can push this market down? What can halt this bullish movement? What is that? Think about it. Oh yeah, Jeff says you should discuss. Yeah, this was our pound breakout. We told everyone to buy the markets. We stayed true. We're actually buying the market for 1, 2, 3, 4 months. And we're trying to coach everyone. So, but buying's over. Realistically, buying's over. Well, let me ask this question. Based upon your experience thus far, would you agree that the markets form highs and lows inside of the same price points? Would you agree with that statement? Markets U-turn within inside the same price points. So what if we just focused in on that concept? And what if we said to ourselves, let's just find areas within the market where the market forms highs and lows, and just use that. And so the question that you want to ask yourself is, price point 1.8800, does the market U-turn and form highs and lows at, on, or around? Yes or no? And the question is, should you buy the market right now, knowing that it's hitting 1.8800, which has been assisting and U-turning this market since 2010? Now, I'm not saying jump in the market selling. That's not what I'm saying. What I'm saying is if you're buying this market, get the heck out of Dodge. Close your buy trade. It's over. You know, unless you know something that I don't know, but the reality of this is this market is over. Now, you may say, well, Josh, that's only one thing. You're right. It's only one thing. But to that point, do you see the pound NZD in an uptrend? There's a low, there's a high, there's a low, there's a high. And what if we brought in Fibonacci's? Oh, my goodness. Look at this. What's happening right now? What's happening? A 1.618 D extension price point is being hit at the same time as a 7-year U-turn. Now let me ask you this question. Do you really want to buy the market right now, or do you want to use this information to be an intelligent investor and say, based upon this, buying opportunity is over and we should open the door to selling? Because according to the percentages, if you sell this market, you're going to look to generate money. And if you buy this market, you're going to go through a roll down. Now you may say, Josh, the market has already gone up. And I'm saying to you, yeah, no, the market's already gone up. How much further is it going to go? See, if this was like 7 years ago and I was a brand new trader 8 years ago, I would say, wow, you know, the market's gone up thousands of pips. Let's just jump in this market buying because it's already gone up thousands of pips. It has to work. Now that I'm more of an experienced, intelligent trader, I'm going to say, whoa, that market has already gone up thousands of pips. Probably going to have a pullback. Let's look to trade that pullback. Because even on a monthly time frame, that's going to open the door to thousands and thousands of pips. Make sense? Okay. Now, if the market's going to fall, where do you think the market's going to fall to? Think. Just think about it. If the market's going to fall, where do you think the market's going to fall to? Just think about it. Just think. Mark says look left. Okay, so I'm going to look left, but what's my purpose of looking left? What am I looking for specifically? On says the B high. Okay, so what's happening at the B high? Specifically, what am I looking for? If you don't know this, you need to write this down, okay? You need to find the areas where the market forms highs and lows over and over and over again. And your job as an investor is to say, hey, this is where the market likes to U-turn on. Whether the market forms a low price or whether the market forms a high price or whether the market closes on it, you tell me, yes or no. And the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, out of the last 9 out of 10 months, 90% of the months, 90% of the time in the last 10 months, we have touched this green line. Do you think that if this market's going to have a bearish reaction because it's hitting a D extension and because it's hitting a 7-year U-turn, do you think that this market's going to naturally gravitate bearish towards this green line because we've touched it 90% of the time in the last 10 months? Does this make a little bit of sense? Do you understand that we're starting to stack all the odds in our favor? And we are trading in directions and trading towards price points that the market likes to do over and over and over and over and over again, and that we're not asking the market to do anything different than what it likes to do. That's important, because if you are trying to trade in the direction that the market's not used to, you probably are going to lose. So it's important that you look at this market and you try to find these areas, because this is where the market gravitates towards over and over and over again. It's also why grid trading is so successful, but we can talk about that later, okay? Now, let's look at this price point. I like to be a little bit more conservative, and so instead of having my limit to be the actual blue line of U-turn, I like to find the high price that's just a little bit above it, and I like to close out a little bit earlier. Traders have often said that I, leave profit on the table. I don't disagree with them, but when I drive my truck around town and I see a stop sign or a red light, I don't slam on my brakes last minute. I like to slow down. That's how I look at this. I look at this as slowing down before the U-turn. So 1.7996, let's just go 1.8 thousand is going to be monthly future support. This is going to be a limit. That's going to be about 800 pips down. Okay, so I would like to make more than 800 pips though. I need to make like 2,000 pips, at least 1,500 pips. But I need to make this 1,500 to 2,000 pips. And so what I'm going to do is I'm going to go to my daily time frame, and I'm going to look for justifications to sell this market at a high price. And then when my daily time is at a low price, I'm going to take profits and have it reload. So I'm going to bring up the same exact currency pair, just a different time frame. Same currency pair, just different time frame. And I'm going to bring up GBP NZD daily time frame. Oh, that looks really good. Wow. Whenever I see the market just extremely exhausted, it's just very exciting because it opens the door to a very, very large pullback, which makes me very, very happy. Now, 1.8800 is going to be monthly future resistance. You just have to believe that. If you believe it, it's going to make your life easier. If you don't, you're going to have a trust battle. Limit is going to be 1.8 thousand. 1.8 thousand. 5. And $1.8 thousand is monthly future support. That will be the limit. That's going to be 800 pips away. Okay. Up AB boundary. Here's your latest AB boundary, A, B, C, D. Your daily D has been hit. I am going to turn to the 1 hour time frame and will look for a selling trade towards the monthly support. Good, 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 good. You're very, very welcome, Donald. Very, very glad to hear that, my friend. Okay. Now, I'm going to go to my 1 hour time frame. Now, my plan is not to just jump in this market. I don't like doing that. I'm going to strategically look for areas that will show that the momentum is reversing. And I'm going to look to sell this market at the high price, okay? Oh yeah, I agree, Adrian. I agree. Like, this is a good spot. We're in a good prime position. The only struggle is that traders going to have right now is just waiting for the entry, waiting for the reversal. You can sell the market now if you want to. You do have the odds in your favor. It's just how much drawdown do you really want? That's really the question. How much drawdown do you truly want? Market's moving quite a bit. The market has moved 1,000 pips in 8 days. So that's a runner. And the question is, do you really want to sell the market without confirmation of the U-turn after it has already ran bullish 1,000 pips in 8 days? So that's where the balancing act of how much drawdown do you want really comes in. And so we have 800 pips of downward movement, and you just have to ask yourself, do you believe in the waves? Do you believe in wave movements? Monthly, future support. This would be the limit, 800 pips. And so I just want to ask you, do you believe that if this market is to fall bearish, that it will fall in waves? Do you believe that? Yes or no? It's a belief. Because if you don't believe it, what do? You go, okay, well, I am fearful that the market's going to make a straight line move, and I'm fearful that it's going to fall without me, so I'm just going to sell now. And usually usually it works. I'm going to be really frank with you. If you sell and the market's exhausted like this, typically it works very, very well. But, if you're new, you really want to get in the habit of waiting for the reversal and just start selling when the market's in the downtrend. Now, what can kind of entice me to enter in the market selling? When I stack the odds in my favor. So outside of support and resistance, let's just think for a moment, just think that outside of support and resistance and U-turns, what could signify that the bears are going to drop? Outside of support and resistance, what can signify it's going to drop? Yeah, you have candlestick formations, king crown formations, but what else? What helps you count the waves? What about Fibonacci's? What if it's hitting a D extension? What if the market hits a D extension? Would that build confidence of a pullback? Yes or no? What if you do that with the 7-to-11 rule? Well, yeah, it makes a lot of sense. Okay, let's do that. Now, if I were to bring in my up trend lines, ooh, my up Fibonacci's, we are not hitting a D. And what I mean by that is, for me, if we were hitting a D extension, I would come in and just be like, hey, let's just sell it now. We're hitting a D. We're already got the U-turn off the monthly. I mean, off the monthly and the daily. Makes a lot of sense. But because the market is not hitting a D, I say wait for the trend reversal. Wait for the structure. Does that make a little bit of sense? Does it make at least a little bit of sense? Because the D extensions signify that the market's going to pull back. Those are your high winning percent opportunities. Now, so instead, I like to be a little bit more conservative. We can wait for this and just sell a counter trend line break bearish towards the south. Now, if you want to go search for another time frame and you want to go look at the 4 hour and 2 hour and go search for a D, you can go do that. That's not a bad idea. It's just make sure that you are applying steps as an investor that allow you to generate the most amount of return. Don't go try to manufacture a trade just because you want to place a trade. You guys understand that? What I mean by that is, listen, if you want to sell the market, you go find justification to sell the market. If you don't see, if you look at this 1 hour time frame, you're kind of like, well, it's not hitting it here. I'm going to go find a D extension on a time frame. You can go find that. But just make sure your steps and your habits and what you're doing, make sure, guess what I'm trying to say is this. If you're going to generate a return, you have to be able to duplicate those actions to generate a return later on. If you want consistent, reliable income, you have to follow the same strategic actions and same strategic habits every single time you place a trade. And if you are changing your approach every single time to go try to manufacture a trade because you just want to enter in, and you are unable to duplicate it because you're changing your approach every single time, it's very difficult to find consistency. Type in yes if that makes sense. So if you're not generating consistent, reliable income, but you find yourself changing your approach all the time, changing your strategy to force or to find a trade right now, that may be the reason. Just trying to put into perspective. Now let me go ahead and type this out. Entry, counter trend line, break bearish in the sell zone. Stop. 15 pips above last high of U-turn, which just basically means the market is a fall now, counter trend line break bearish. And if you were with me last night, you know about crowns. So this would be a crown, left tip, center tip, right tip. Stop would be 21, 31, 36. This is a large stop. So this is almost a 200 pip stop, which is very, very large. So what you may need to do is you may need to wait for the second wave in the sell zone for a better equity management. Go ahead and type in done, D-O-N-E, when you have this copy down. Type in done, D-O-N-E, when you have this copy down. Yeah, I agree with you, Donald. I agree. Okay. Let's do one more. We got time for one more, then we're going to do grid trading. Okay, but I always like to give you 3 currencies, so let's do one more. We have to do it a little bit faster, okay? Art says pound Aussie. Let's look at the pound Aussie. More than likely, the pound NZD, if the pound NZD hit that U-turn, more than likely your other pounds are also hitting their U-turns as well. So, yep, sure did. This low, 72.13, 1.7213. resistance. Are we hitting support becoming resistance right now? Now, we can't touch the pound Aussie until the monthly candlestick closes. And here's the reason why. Today's Thursday, so tomorrow's Friday, then the month will close, and by Monday, which would be May the 1st, I can't believe it's already May. It's incredible how fast this year's going. We have to, here's the decision maker, okay? 1.7213 is the line in the sand. If the market on the monthly time frame closes above, I am expecting the market to push bullish towards the down trend line. If the market closes below 1.7213, I will expect the market to push back down towards support. Okay? And support's going to be this green line, which is 1.6 thousand. So that should be 1.6 thousand, yep. So 1.6 thousand monthly support. Okay. So sometimes you're going to ask the question of, is it time to buy or is it time to sell now? And the answer is, we don't have enough information to make the decision. You need to learn that skill. And it is okay to say, I don't have enough bars or enough candlesticks to make a decision to where it will stack the odds in my favor. 2 months ago, what did I say? I said, as long as we do not close below 1.6 thousand, we're going to buy the market. Type in yes if you understand that. As long as we do not close below 1.6 thousand, we're buying. Did the market go up? Yes. Now you may say, well, Josh, I want to buy the market now. Too late. You had 2 months to do this. It's too late to buy it now. Now what I'm saying is, as long as we do not close above 1.7213, we will sell it. So if we close above 72.13, we're going to expect the market to rally. If we close below 72.13, and we're going to be waiting, it's Friday is going to be the close, we will look to sell it. It doesn't matter if the market closes above. If it closes above, it's a 700 pip move up. If it closes below, it's a 1,400 pip move on the way down. I just can't tell you whether to buy or sell right now because it'll be guessing. I don't like to guess. I like to apply the habits which produce consistent income. Type in done, D-O-N-E, if that makes sense. So just look at this on Friday when it closes, or Sunday when the new candlestick is here, and then you can make your trade plans. Okay. Grid trading. If you don't know it, you're about to learn it. We can apply grid trading on any currency pair of your choice. Type into the question section box the currency pair and the time frame. We're going to put grid trading on there. We're going to show you 2 strategies. Strategy 1 is a strategy designed for novice traders who are brand new or who do not know anything about the market. And strategy 2 is going to be for investors who know exactly what they're doing, but they want to optimize and amplify the returns. So give me a currency pair with a time frame. So Rana says Euro Yen 1 hour. Okay, so we'll go Euro Yen 1 hour to start out with. EUR JPY. And what I'm going to do first is I'm going to just identify. By the way, we talked about the euro yen falling last night, and for those of you who scalp the market. Excuse me. So let me ask this question. Would you like for me, because I can only imagine, because we've been talking about grid trading for about 2 weeks now, on a daily basis. Would you like for me to set up grid trading to amplify the returns? So would you like for me to show you the limits to maximize returns and how to apply the grid trading to amplify it? Would you like for me to do that? Okay. This way, even if you don't use grid trading, you can still get some few more trades and you can limit out. And then for those of you that already have grid trading, you're going to be able to strategically use this to maximize your returns. Okay. Now, Euro Yen daily time frame. I need to find that target, and this is what I'm going to be doing for you when we work together as well. I'm going to give you a bunch of these targets and workspaces. Okay. Look at this. Look at this beauty. All right. What does the market do at this downtrend line? What does the market do? For the most part, it falls. Now, long term, according to the monthly time frame, we do expect the euro yen to rally towards the north. Long term. But we're going to have, and it is expected to have, a little bit of a bearish reaction. Why? Because we're at the downtrend line. Plus, if you use this little inner trend line, you're pretty much right there as well. So you got two trend lines meeting. This resistance level and the previous resistance level. Okay. But you and I need to find the area where the market forms highs and lows for a limit. So what we do, we bring in, we look left. And look what we have here. We have this high price, 11845. So 11845, make that green, is a U-turn level. So here's a U-turn, there's a U-turn, there's a U-turn, there's a U-turn, there's a U-turn, and this will be the limit. So 11845 is going to be the limit. So 11845 will be the limit. Now, how far away is that? 11845 minus 120.82, that's 237. 237 pips away. Okay. We're going to go to the 1 hour time frame. And what I would like to do is carry over that limit of 118.455. I'm going to go 118.45 is going to be the limit, 237 pips away. Okay. You need in a grid, okay, how does grid trading work? Well, grid trading works by the markets hanging around the same price points and touching the same price points over and over and over again. Type in yes, why yes, if you understand that. Grid trading is taking advantage of the market touching the same price points over and over and over again, okay? And what does that mean? Well, that means that if the euro yen is to fall to 118.45, you can see since March, we've touched it 1, 2, 3, 4, 5, 6, 7, 8 times. This will be the 9th time. So you may want to look at charts and just kind of ask yourself the question, does the market hit the same price points? The answer is yes. Write these rules down, please, because we need to find the levels within your grid. 500 bars of memory. 2, mark the highest and lowest price. 3, take that number or measure the distance of the highest and lowest price. 4, times that number by 3. Number 5, divide that number by 2. And number 6, divide that number by the number of levels in your grid. I am going to use 10. Okay. So 500 bars memory. Here's the low price. Here's the high price. That distance is what? 717 pips. Now, I take this number and do what with it? I times it by 3, which is how much? 717 times it by 3 is what? $21.51. 21.51 pips. Now take that number, 21.51, and divide it by 2, which is how much? Divided by 2. 1,075. Then take 1,075 and divide it by the number, your grids, just so happens I'm using 10, and that is how much? Divided by 10 is 107. Now, this is how the grid works. Traditionally, what you would do is you would come in here, traditionally, and you would right-click and sell the market, and you would have a stop and a limit. Type in yes if you're following. Traditionally, you would enter the market selling, and you would have a stop and you have a limit. Okay, now, how grid trading works is you come in here and you right click and you're going to be introduced to what's called the matrix tool. Left click over matrix and you're going to have the ability to enter in the number of levels. You can have 1 level, 2 levels, 4 levels, 5 levels, 7 levels, whatever you want, up to 10. You type in the number of pips, your lot size, the distance between the levels, that math that we just did, type that in there, 107. You can launch your grid above the market, below the market, on both sides. You can decide to sell or buy. You can launch your grid off of a price point or an alert or an alarm or your favorite indicator. You can have a stop loss and you can have a limit. Our limit's going to be 118.45. I'm going to release it in 3. Watch what happens. 2, 1. Go ahead and type in yes if you can see that my grid has now been released and that my grid is now on my charts. Okay. Excuse me. Now, what happens if this market falls and hits the limit? Well, it would more than likely do something like this. Lower lows, lower highs, lower lows. And because I'm using a grid, it's going to strategically enter me in when it touches this level and this level. And so how much would that be worth? Well, my second trade will be entered in at 119.86 minus 11845, 141 pips, 141. My third trade will be entered in at 11879 minus my limit at 11845, that's 34 pips. My original trade would be 237. So what would that look like if I used the grid right now on the euro yen? Well, it would look like this. First trade would make 237 pips. Second trade would make 141 pips. My third trade, my third entry, would make 34 pips. What would be the net return? 237 plus 141 plus 34, 412 pips, so 412. So I would make 412 pips, basically, and this typically is on average, doubling the production. Type in yes, why yes, if you understand that if you were to grid trade right now in the euro yen, you would double the production. You would take a 237 pip opportunity, turn into over a 400 pip opportunity. So if you're an advanced trader, you double the production. Now, what if you're saying to yourself, well, I don't really know too much about trading. And, you know, I would like the concept and I would like the idea of generating profits, but I'm kind of unsure. Type in me, M-E, if you're a little bit new, if you haven't been around the block a time or two, but you're able to come to presentations like this and just hear myself or another master trainer or one of the analysts say, sell the market or buy the market. Okay. What you're going to want to do is you're going to want to make this button your best friend. Because let's just say you use this grid trading. You see where I checked the box that says close all orders on net pips? Well, the distance right now between these levels are 107 pips because we did our formula. What you can do is you can say whenever I'm up 107 pips net, I want to close out of my trades. Let me share with you what happens when you do that. Okay, so right now, the euro yen is expected to fall bearish, but would you agree that the euro yen has an opportunity, if it wants to rally? So this is what would happen for you. You would sell the market. If the market rallies up against you, your grid will enter you in selling. But because the market moves in waves, the market does the same things over and over and over again. As it comes back down, what happens? Your first trade will break even, but your second trade will make 107 pips, and you would have a net closeout of 107 pips. And it will do it automatically for you. Now, what happens if you sell the market now and it just goes your way and falls to the next level? It will automatically close you out once you're net 107 pips. What you can do, which is encouraged, is to take your 107 pips but then enter back in with a grid. just in case this market does decide to wave against you, because if it waves against you, what happens? You hold your negative position, but the grid will enter you in, and as the market does its job and moves in waves, which it does, once you're up 107 pips, you get another net closeout. Type in yes if you're starting to see how this works. Okay, give me a currency pair and give me a time frame. We'll go ahead and show you. We will show you what it looks like just to kind of novice trade with grid trading. And by the way, if you're kind of wondering, hey, how do I remove my grid? You just close it. Close your trade and it comes right off. Super simple. Okay, so Jim says Euro US dollar. Krishna says Euro US dollar 1 hour. Just do that. EUR USD 1 hour. And let's do the formula. Excuse me. 500 bars memory, mark the lowest point and the highest point. That's 380 pips. 380 times it by 3, divided by 2, divided by 10, 57. I'm going to launch my grid because I have 57 pips in between. What does it look like? Right click, matrix, 10 levels, distance between pips, 57, both sides, I'm buying, and close out when I make 57 pips. 3, 2, 1, type in yes if you can see that my grid has now been launched and it is applied onto my charts. Okay. Now, to give you a solid understanding of how this works, what I would like to do is share with you what your results would look like on a day-to-day basis if you traded this way. Okay. Now, for whatever reason, for argument's sake, you decide to buy the market. You launched your grid. You know, you said, hey, the market's at a low price. I'm going to launch my grid. You're taking a novice approach, and you're saying, hey, I'm just going to trade towards the next level, which means you set your grid to automatically close out at the next level, or when you hit net 57 pips, which is the difference between levels. So when the market rallies up, what happens? You buy the market. The market is to rally bullish towards the north, and you make your 57 pips. But, you know, you're really not too sure about the Forex market. You kind of understand the market's going to go up. You've been participating in some presentations, and you've been using your basic information, and you're just kind of like, hey, Euro's going to go up, but I just don't really know how far. So you just reapply your grid. What happens? You let the grid do its job. You set it to where it automatically closes out when you're up 57 pips, which is the distance, and there it is. Bingo, another closeout. But, you know, because you don't really know too much about the Forex market, but you want to, you want to win upwards of 90% of the time, you reapply your grid, and what happens? Market rallies up, you have another 57 pip closeout, and what do? You buy the market again. And you just let the grid do its job. Now, if it goes against you, the grid kicks in, will automatically buy you in. And in this scenario, the market gaps in your favor, which is fantastic, but your first trade breaks even, your second trade makes 57 pips. You could have made much more than that, but we're going to walk away 57 pips. Touches your grid, you buy back in. Let's see what happens. Market goes against you. The grid does its job, buys in again. Goes your way, your first trades break even, your second trade makes the 57 pips. So copy, paste, another 57 pip closeout. Does everybody understand that? Type in yes, you understand that. You bought in, goes against you, your grid does its job, buys in, and then your first trades break even, your second trade's 57 pips, because you programmed this to have a 57 pip closeout. Then you buy in the market, then what happens? I don't know. Let's see. Does it go your way? Does it consolidate? Does it go against you? Goes your way, you make another 57 pip closeout. And then you buy it again because you're grid trading. You're just trading the grid. So let's see what happens. Goes against you. There's the buy. The grid's doing its job. And I don't know if you get limited out. There you are. So market came just shy of giving you another 57 pip closeout. So what does this look like? Well, basically you're having net closeouts of 57 pips at a time. You're letting the grid do its job, and you're letting yourself focus in on just being a trader. You get the ultimate forgiveness as an investor. You're using the ultimate technology, which is not available anywhere else in this world but here. So let's recap. If you know what you're doing in the Forex market, what can grid trading do for you? Double your production. If you're used to making 500 pips a week, expect to make 1,000 pips. If you have no idea what you're doing in the Forex market, what is your expectations? To win upwards of 90% of the time. Type in me, M-E, into the question section box if you would like details on the grid trading course to come join me in an upcoming class. Okay. Ladies and gentlemen, this is my baby, and what I mean by that is this is my program. I'm the developer on this. I'm the one who created this. I'm the one who pushed through this, and I'm the one who's going to be educating you and teaching you. This is something that's not available anywhere else in the world but here. In this class, I'm going to teach you how to grid trade with position trading, swing trading, and scalping. I'm going to teach you how to amplify your results. I'm going to teach you how to optimize any strategy of your choice to help you become upwards of a 90+% winner. What do you get? You get a 4-hour class with me, on-demand recordings, access to the matrix tools, strategies, checklists, manuals, workspaces, ongoing access to the class. Now, I call this universal trading with grid trading. You can trade directly from your charts. You can manually launch your trades. You can use alerts and signals and price entries and pending orders to launch your grid. It's around-the-clock smart technology. Here's my expectations, okay? I'm going to give you what's called a once a month fill in the gap sessions where I'm going to educate you and train you. And then within 30 days, you and I are going to work with each other to where I can provide you the ultimate confirmation. I do this to where if you're missing anything as a trader, I do this so that you and I as an investor will have the ability to work out any questions that you have. I think that's very, very important for implementation. Here's my expectations. It's going to optimize any strategy. It's going to amplify results. If you are a mastermind trader, a leveling or a target trader, it is a must-have tool for you. Traders who want to win upwards of 90% of the time, and investors who would like to take control of the wave movements. So grid trading course, manuals, checklists, live trading follow-ups, unlimited access to class recordings, and reattendance is a retail value of $3,495 US. But you know, anything in what you do in this world comes down to an investment, return on the investment. So what I want you to do is put your investment caps on. And what I want you to do is honestly answer these questions on whether or not this is worth it. So let me ask you the first question. If all this program did for you was allow you to make an extra $7,000 to $8,000 a month, month after month after month for the rest of your life, would it be worth the investment? Yes or no? Stop and really think about it. If all this program did for you, if all it did was allow you to have consistent, reliable income to where it covered your monthly overhead expenses, your car payments were paid for, your mortgage was paid for, your debt was paid off, you have a little bit of money to go travel and go out to eat for dinner. If that's all it did, nothing else, would that be worth the investment? Yes or no? And if all this did was just teach you that life skill to generate consistent, reliable income so that you could structure your retirement for the next 12 months or over the next 12 months, would that be worth the investment? Yes or yes? Now, my friends, I came here to serve, I came here to empower, and I came here to teach you enough information and allow you to make a conscious decision to change your financial future for the better. I also came here to make things extremely affordable for you. This is what we refer to as our early bird savings. We already had our first tier savings, that is over with. This second tier savings is about to end, which means you're getting the best enrollment price right now. For those of you who type your telephone number into the question section box right now, you're not going to be paying $3,495 US. When you type your telephone number into the question section box, we will give you a savings of $1,250 US, making your enrollment price the $22.45. When you type your telephone number into the question section box, we will provide what's called a soft hold, which basically means we will reserve one of these spots for you. We'll contact you at the telephone number in which you provided. We'll answer any and all of your questions. We'll put you in a position of empowerment, and then you can say, yes, I want to do this, or no, I do not. So at this point in time, what I want to do is recognize the following traders who just typed their telephone numbers into the question section box. I want to say thank you very much to WIE. I have your telephone number. We'll provide a soft hold. Thank you, Derek. I have your telephone number. We'll be more than happy to answer any and all of your questions. Thank you, Peter. I have your telephone number. We'll have one of our education specialists answer any and all of your questions. Jean and Emmanuel, I have your telephone number. We'll put a soft hold on this, and we'll empower you with the knowledge and what you're searching for. Now, I do have some mega fast action bonuses, which is basically means that if for those of you who enroll today, you're going to receive thousands of dollars of extras, which is not available to anyone else. Now, this means if you make the decision to enroll right now, I'll give you 3 total months of my live trading follow-ups, specifically with me. This means for once a month for 4 hours, I'll have a fill-in-the-gap session with you, making sure that you're implementing this and using this accurately and appropriately, okay? That is extremely valuable. Now, I can only do this next bonus for 14 more people, and then it's taken off the, then it's no longer available. So that matrix tool that launches the grid. The matrix tool that launches the grid, MTI wants to charge a monthly maintenance fee because of the upkeep in which it requires from us. For the next 14 people that type in bonus, BONUS, into the question section box, we will eliminate that monthly maintenance fee, saving you thousands and thousands and thousands of dollars over the life of your trading career, which really means that you're going to have lifetime ownership of the matrix tool. So as long as you have charts, you will always have this matrix tool, and you would never, ever be charged a monthly maintenance fee. In my opinion, that is an ongoing give back and an ongoing savings. Type in bonus, BONUS, and you're entitled to this. I'm going to say thank you to Alan. I have you for bonus. Jim says, have Mark call me. No problem, Jim. We'll reserve this. Have you for bonus. Emmanuel, Tom, and I have you for bonus. Jean, Felix, Lily, got you for bonus. Christy, got you for bonus. We'll have one of our education specialists reserve a spot for you. Tab, I got you for bonus as well. Thank you so much. We'll have one of our education specialists reach out to you. Kyle and Josh H. I love the name Josh. I have you for bonus. We'll have one of our education specialists reach out to you. Now, for those of you that have already made up your mind, and for those of you who are interested in getting started right now, and you're kind of like, hey, Josh, I'm a little bit busy here, but I'm ready to get started right now. I don't need a phone call. Here is a link inside the question section box. Here's a link inside the question section box. This will bring you directly to a 100% secured online sign-up page. This will give you the ability to skip the line and sign up right now. The reality of this is there's only 14 spots left of eliminating the maintenance fee, and so this is the best way to guarantee it. So grid trading course, $22.45. Your savings has already been reflected. All you do is fill out your first name, last name, address, city, state, zip code, country, phone number, email address. You can get started with American Express, Discover, MasterCard, and Visa credit card number, expiration date, and you are done. Now, if you sign up for this way, you do receive a 30-day, 100% satisfaction guarantee, which basically means that once you enroll into the program and you come to the class with me, you will have 30 days to make your final decision on whether or not you want to keep it or get your money back. So what does this really mean? It really means you have nothing to lose and everything to gain. So I want to go ahead and say thank you for the opportunity. Thank you so much for giving us the chance to work with you. Thank you, David. I have you for bonus. Thank you, Felix and Jean and Alan and Donald. Colleen got you for bonus. We'll have one of our education specialists contact you, reach out to you. Now I'm going to leave this open here for the next 3 to 5 minutes. Thank you, WE. I see what you wrote. Be more than happy to reach out to you. Stay by your phones. We're going to contact you now. But on that note, every day, helping traders find a way. This is Joshua Martinez out.